Hello, good morning, everyone. It's Tim Davis again coming to you guys with another weekly market review. And actually, I'm doing this early on Monday morning, March the 14th, 2022. It's now about 4:26 in the morning. I wanted to get this out there before the week really gets to a good start. Um, so, where I'm going to start this off this weekend is by showing you guys the Wall Street Journal's Marcus page that shows the high lows for the week, or high lows that were last created um, since the market closed on Friday. And I'd like to continue to point this out just to show you guys the overall breadth of the market, and that way we can get some type of idea of how the market is overall market is still trying to trend. Until this changes, we will still continue to see the overall market trend the way the breadth of the market is showing us. So with that said, this is right now we're looking at the overall highs and the overall new 52-week highs and new 52-week lows for the New York Stock Exchange. As you can see, the selections here. So as of the closing bell on Friday, the market showed, the New York Stock Exchange showed 58 new 52-week highs. And if we scroll halfway down, we'll see the new 52-week lows. And look at that, 341 new 52-week lows. That is a big ratio difference. So new lows are still in control, which means the breadth of the market still showing a lot of weakness underneath the surface. That's a huge difference, folks. Now let's take a look at NASDAQ. I think NASDAQ is even a little bit worse. 57 new 52-week highs that was shown as of Friday. And look at the new 52-week lows, folks. 469. 469. So the breadth of the market is still in favor of bears. So that's one thing we want to point out. Next thing, let's take a look at the VIX and see how the VIX closed on Friday. This also is telling a story. And I'm going to look at the VIX futures, and I'm going to show you guys something here. All right. So this is a channel, the VIX futures I've been tracking since the VIX has been in this little uptrend. So we've been pretty much traveling within this channel. And every time we got to the top of this channel, we pulled back. Every time we got to the bottom of this channel, the VIX tended to rally. Notice what the VIX put in on Friday. Look at this candlestick at the bottom of that channel. It's almost like a hammer. Normally you see, this small body with almost no wick on top, but a strong wick on the bottom and a screen. Normally that's a sign of reversal back to the upside. So the VIX could be on its way back up. And I'm heading back towards the top of this channel. Ultimate goal, I really think VIX is going to find a way to get just above 40 before we see any drastic changes. So this could be the week. So keep that in mind. The VIX is looking like it wants to reverse back to the upside. That's something to pay close attention to, as well as I already showed you guys the overall breadth of the market. Now with that, I want to show you guys also the tool that tracks the percentage of S&P 500 companies trading above their 200-day simple moving average. And this also still shows a lot of weakness. Look at that. It's a daily chart. As you can see, we are still trending below this yellow line, which is below the 20-day moving average. And as of Friday, here is the percentages. 35% of S&P 500 companies now, just 35%, only 35%. Again, only 35% of the S&P 500 companies now trading above their 200-day moving average. And as I like to point out, we were as high as 97% way back. Can't even see it, but way back in in April. Here we go, April 2021. So last year we were as high as 97%. And as you can see, since then, we've just been trickling lower. So we've been really trickling lower, and I think we probably have a little bit more lower to go before we see any significant moves in this market. I think this week, folks, we have a huge chance. There's a huge possibility we will test this low right here, which is 28% of S&P 500 companies trading above the 200 moving average. When we hit that low back around February 24th, there's a huge possibility we can test and break that. And if we test that and break it, we could see a washout. I mean, washout all the way down. And then that's when we can start looking for some possible chance of reversal. If we get this break here and wash out, wash all the scared money out the market, we may be in store for some type of reversal. We have to see how that pans out this week. All right, now let's take a look. Let's see. Okay, look at the VIX. We looked at the S&P 500. S&P 500 stocks trading above the 200 moving average. Took a look at the breadth of the market by looking at the Wall Street Journal's highs and lows. Now let's take a look at individual indices. Here is a look at the daily chart of the Dow Jones futures. And we still see that the moving averages are still trending downward. We're getting the 50-day that's crossing below the 200-day right now. Price action still trading below this 20-day moving average. And we've been trading below the 20-day moving average for a couple of weeks now. So we're sad it pans out this week, folks. But right now we are definitely trending downward and staying muted below the major moving averages on the Dow Jones. Weekly chart shows we get into a point of oversoldness. RSI not quite oversold on the weekly chart, so I say we still could see some heavy selling here in the near future, possibly. Especially with a lot of news coming out this week. Got the Fed speak this week. Still, I think a lot of news going to be surfacing from the war in Ukraine. Still got supply chain issues, and inflation is still a problem. So there's something to keep in mind as we go through the trading week this week. Let's take a look at the S&P. Pretty much same type of scenario. Here's our weekly chart. Now trading below the 50-day moving average. Prices just constantly, weekly chart just trending lower. Now breaking below the 50-day moving average. Here's our daily chart. Price action still being muted. Every time we get a rally up to the 20-day, as you can see up here, we have been getting rejected at that level. That's been 20 has become a strong area of support. Rally back up to it here, another rejection. So the 20-day moving average is still a strong area of support, unless we can see the daily S&P E-minis and the Dow Jones get a big strong rally push back above this 20-day. More likely, it's going to continue to act as an area of resistance until the market finds a reason or way to turn it around. Right now, we're still in a definite downtrend. Let's glance at the NASDAQ. NASDAQ and the Russell is probably the worst of the Mohicans, folks. Those two are definitely getting sucked. They're getting life sucked out of them. So here's the NASDAQ. It's well below its 50-day and its 200-day. I mean, well below it. And again, 20-day is acting like a strong area of resistance. NASDAQ has just been extremely weak, heavy. And NASDAQ is heavy with tech sector. So just take a look at what's happening in China with those tech stocks. They just keep getting pummeled. And while our NASDAQ, our tech stocks, I don't think they are getting pummeled too, but probably not as bad to the extent of China, but it's still the weakest link over here in the U.S. market. This is the heavy tech NASDAQ sector. So that's showing a lot of selling pressure. And looking at the Russell, Russell's been stuck under its major moving averages for a very long time, and seems like it's not getting any better. It's like it's getting ready for another washout. And let me show you guys some price midterm action that you can really probably pay close attention to. So as markets have been trying to stay in touch with their 20-day moving average and trying to stay close to it, I think we're about to see another leg down, and I think some of these lows are about to be tested. So on a daily chart, here's our area to watch, pay close attention to for the Russell, and actually I'm going to switch to the regular cash market Russell while it's not trading. Let's show you guys some areas to pay close attention to for actually I got my fib on this one, almost right at my fib, 38.2% Fibonacci retracement level. That's probably going to be taken out. So this area down here, get rid of this fib right now. So I'm looking for a test of this low that was created back around February 23rd. I think we're going to get that test of that low probably very, very soon. And if price action doesn't hold up there, we're going to see a big break to the downside. Same thing with the S&P 500. I think there's also a level to pay close attention to. And that level on the S&P is right around about 41, that $4,100 level, 41.14. That's going to be a test we need to pay close attention to on the S&P 500. Probably going to test that level this week, possibly. Let's see what happens when we get there. For some reason, we don't bounce at that level. Watch out below because we could be in store for a another big leg down. Look at the NASDAQ, same type of scenario. So the NASDAQ test probably won't come a lot sooner. So here is what we're looking at on the NASDAQ. A test right around 12,587. So a break below that level. If we test that and fail, NASDAQ is probably going to see a washout. This week is going to be a real determining factor, and the Fed is going to play a big part in what the overall market does this week. So pay close attention. These lows have a very, very good chance of being taken out this week. And that could spell a washout in the market, folks. So pay close attention to that. And here is the level for the Dow Jones, right around at 32.7. 32,700, somewhere around there. Let me see if I can see it on the weekly chart. The chart's not going to show me, but right around, my glasses on, right around that 32,000 level, 32,272. So that's the level we want to watch for today, 32,272. We break below that level, you can see a washout in the Dow Jones. So we got some things to pay close attention to, folks, as we travel through as we trade through this week. The major markets are at another breaking point of a possible bigger, larger leg down. So that's something we got to pay close attention to. Looking at gold and silver, they have also, believe it or not, they probably reached a short-term peak. So we had to pay close attention to that. I'm going to draw your attention to the weekly chart of gold. So weekly chart of gold reached overbought territory. As you can see, the RSI got a little overbought here, hit that resistance level, and it got rejected in a big way. So we could start to see some pullback in gold, folks. So pay close attention to that too. Even with everything going on, we could see a pullback in gold, maybe even back to the breakout point. So that may take a while, folks. So pay close attention to that. We could be getting a pullback and go back to the breakout point, which we probably will find some type of support, so that could last a while. So pay close attention to that. Silver also silver's not as so silver may be getting a slight pullback here, but I still think silver has some room to run, but it's still could see a pullback, maybe back to the 20-day moving average. We're going to see how it pans out. So maybe we'll be getting silver drop back below 25 over the next couple of weeks or so. So pay close attention to that as well. Looking at copper, Dr. Copper also showing some signs of a reversal as well, back into this breakout range. So we back into that level. So Dr. Copper, pay close attention that we could be in store for some more pullback here as well. And crude also, folks, we are just keep hitting these overbought levels in crude. And the crude, look at this is a crude weekly chart. So I'm in a camp that we still can see higher oil prices, but I think in the near term, we still could see some type of pullback. And maybe even might see crude, find a way. If it doesn't settle right around this $100 level, we could see crude pull back to about 93, 95 before we see a huge reversal. This is a weekly chart, and it shows, weekly chart shows that the full stochastics been in overbought territory. It's like it's trying to dip out of overbought territory. Whereas percentage pointing down on the weekly RSI and overbought territory. So we could see crude continue to stall out around this level, maybe even pull back just a little bit more before we get that next push higher. So that's something to watch for as well. Looking at our daily chart of crude, RSI definitely trending lower. Williams percentage trending lower. Full stochastics trending lower. We are setting right around this 20-day moving average. So that's going to be a test for crude this week. 20-day moving average on the daily. We got to see if that's going to hold. And if it doesn't, we could be heading back to the 61.8% Fibonacci retracement level, which I was watching last week. And if we hit that, that could be a strong area of support. All right, folks, I gave you some things to pay attention to. Again, this VIX is really going to tell us a story this week. Here's VIX futures. We are setting right at an area of support where we could see another bounce. So pay close attention to that. All right, that is all I have for you guys as of right now. Folks, enjoy the rest. Enjoy the beginning of your trading week, since we are on Monday already, and I started this a little bit late this weekend, but nevertheless, wanted to get it out before the market opens. If you got some things to pay close attention to, again, the Fed does Fed policy this week. Fed speaks on Wednesday, so keep that in mind. All right, folks, I'll catch you guys on the next video. Enjoy the rest of your day and the rest of your week.